Hey everyone, have you ever done this where you looked at a chart, you bought a company and you're like, holy crap, this company hasn't done anything for like more than 2 years. It's like flatlining, it's like choppy. And then you decide to sell it. And then you realize you made one of the biggest mistakes in your life because that company all of a sudden doubles, triples, quadruples, and you're like, ah. Hey everyone, I want to share a simple framework for evaluating high growth stocks, okay? So in today's video, it is going to be jam-packed with valuable content. I have done a ton of research and thought about this for like days, if not like almost a week to do this one video. And honestly, a lot of people charge a ton of money to evaluate high growth stocks, but I'm going to give it to you all for free. All I ask of you is please smash that like button so that you let me know you like this video and it lets me know, hey, this effort was worth it. Fair warning, this video might be a little bit longer than my other videos, but I think it is so time well spent, okay? You're investing in yourself. So let's get into it. In today's video, I'm gonna use Peloton as an example. Now, I could have used Tesla, I could have used a lot of other stocks that I have in my portfolio, but I thought Peloton is a great example because you're gonna be a little bit surprised at the very end. A perfect high growth stock has these key characteristics. And this is not in particular order. Number one, is it a company that you know and has a simple business model? Number two, is it a company that grows? At minimum for a high growth stock, I look for at least 10% year-over-year revenue growth. Number three, of course, it has to make a lot of dough. So I got to see either a huge profitability like right now or a roadmap to profitability. And it's got to be crystal clear in my head. And that profitability is at least 10% net margins. Okay, that's profit margins. Number four, this is huge. I need the CEO to be the founder. Ideally the founder, okay? That is like one of the key aspects I look for in a high growth stock. Number five, if the company is selling goods to people like regular consumers like you and me, I look for brand, okay? Brand is like number one. Number six, it has to have a great moat. Like either it has a network effect where every person that gets added on makes that network even more powerful, like, you know, typical social media networks. Either has a reoccurring revenue, like it's very sticky, like people are just like not wanting to leave, or it's just a cult following. So I really look for reoccurring revenue, cult following, network effect. I want to know, does it have a big moat? Number seven, I always look for a lot of upside, okay? Of course, every company, every investment you make has some risk, but the upside must surpass the risk that you're taking. So with a high growth stock, I'm definitely looking at least doubling my money every 5 years. Number eight, I am looking for like huge total addressable market. Like it's either disrupting an old market that's like a dinosaur and needs to be upgraded, or it is creating a new market. Ideally, it could do both. Number nine, I want multiple streams of income. Okay, I know I'm being super picky and asking for the world, but hey, I'm talking about my perfect high growth stock. I want multiple streams of income. Scalability. Number 10, this is a bit harder to value, but I want a big vision. I want a huge problem that the company, the founder is trying to solve, because if you solve that big problem, well, you get highly rewarded. And the company is worth that much more, and of course the stock is worth that much more. The first thing I want to do is like learn a ton about the company. So I'll go to the investors presentations and like, hey, let's use Peloton as an example because I'm one of those suckers that bought a Peloton. But I like Peloton as a business model because first, it's super simple to understand. Most people think of it as a bike with an iPad, but in reality, there's so much more. It's actually a bike that still has an iPad, but it sells you an app that has top-notch classes, okay? I actually love the bike and my whole family rides it almost every single day. See, Peloton has a huge brand. It also has a huge network effect. It has a social media community feel. It also has reoccurring revenue, which is the subscription model to this awesome fitness classes with amazing music and amazing instructors. So to me, it has a pretty amazing moat, okay? Now, of course, the other things I look for is like, obviously, fundamentals. It's got to have growing revenue. It's got to grow, grow, grow. So you can see that, look, the growth has exploded like 100% year over year. Now, I know some of you are going to say,
oh, Tracy, this is like, it's a COVID thing. It's a fad,
But really, look at the growth. It actually grew well before COVID and it's growing at 100% revenue, which is like amazing. I also love the fact that it's growing gross margins, which means that I could see a path where like the more revenue that they're going to collect with the more subscriptions, they're going to get to a path of profitability, which they recently hit. But I want to see, of course, this continuing on. I also love the fact that it has its huge financial position, has a ton of cash and zero debt. Like, that's pretty amazing fundamentals. I also look for catalysts. I want to see what are the opportunities, okay, for it to continue to accelerate growth, to add more revenue sources. And this is where I dig really deep into the investor presentations because I want to see their product roadmap. So there is lots of interesting products, okay? They recently acquired, at first I can't pronounce it, Procore. Okay. Anyways, this is like big fitness equipment. Basically, they're going to make commercial fitness equipment and sounds like they're going to be supplying fitness equipment to gyms and hotels, which is like, yay, that's awesome because it also builds up and reminds people of Peloton as a brand. It's also getting into watches. It's also looking at more gym equipment and having a technology spin with the gym equipment. Really, how many of us have this old treadmill and it's like not connected to an app? I know you can like hack it, put an app on it, but it's not the same when it's not integrated with your health metrics, when it's not connected to your power outage or power output, not outage, or it's not connected to your cadence. So those are the things I really like about Peloton, that the way that it really syncs up with yourself and you're connected to community, plus is amazing awesome on-demand classes, and basically you can work out anytime, anywhere, any place, which is something I really love, even at like 11 o'clock at night when I work out. Of course, I have to talk about the risks, which is something I obviously look at. I want to see, is there a lot of risks versus reward before I actually look at the reward? So some of the key risks I see is obviously competition. We've got Nordic Track, we've got Lululemon who acquired Mirror. So there's a lot more gym equipment that's trying to connect with technology, which makes sense because all of us are trying to build up our home gym. And I think even when we go back to full recovery, some of us like me are going to always work out at home and love to make it more, let's say, interesting at home, where you could just have on-demand classes. Now for subscriptions, this is another competition, which is Apple Fitness. Now I've actually tried Apple Fitness. I'm not super impressed with it, but Apple Fitness, Apple is like a huge cash cow. They have so much cash, they can attract whatever instructor, whatever music list they have, Apple Music, they can easily probably make their Apple Fitness app like way, way better. So I could still see Apple Fitness as a huge competitor, not right now, but maybe in the future. And if you want to know more and more about the risks of any company that you invest in, go to Investor Relations and download their 10K, which is their annual report. And there's a section where you can check out the risks with the company, and they explicitly say it. So I've had the Peloton bike for a while and it hit me, like I had a bit of an aha moment. I was just thinking, like, when you purchase a spin bike, especially with a Peloton bike, how many people are going to continue with the subscription? And checking out Peloton, I noticed that the stickiness, like there's a huge engagement and subscription rate. Okay, a lot of people keep on that platform for a very, very long time. And I think that it comes with like you investing. Like if you invest in such an expensive equipment, like a gym equipment, you really want to maximize it. So I think if I sold my bike, I'm pretty sure that the person's going to buy my future, like my Peloton bike, is probably going to subscribe to the Peloton app because that's where the magic happens. So I could just think of, it's actually not just selling bikes or treadmills, it's actually continually getting recurring revenue for the whole lifetime of a Peloton bike, which is like something I really, really like in this business model. As some of you may know, Peloton has dropped recently, and that actually caught my eye, and I thought, hey, I should do a valuation, just check it out. So what I'm going to do is this simple framework that I use for all my high growth stocks. This is one of my napkin math calculations. My target return on investment is 15%. So essentially I want the stock to double within 5 years. So looking at the market cap, that's what I'm going to use as a way to gauge, can it double its market cap in 5 years? And can I see a roadmap of hitting that market cap in 5 years? So using a market cap of 2 times of what it is today in 2025, I'm going to check, is it possible to hit that revenue, which would double the market cap in 2025? And I thought, hey, Peloton is also a technology plus hardware company, you know, pretty, like I would say something that's pretty similar, of course, not even close to the scale, is Apple, which sells an expensive iPhone and then it sells a bunch of services. Okay, so Peloton has a bit of a flavor of Apple. So I thought, okay, what could be a likely net profit margin in the next 5 years? And I thought at least 10%, because that's one of my rules. I need to look for at least 10% profit margin in 2025. Then I think, okay, well, in order for the market cap to double, what would the revenue really need to look like? So then I think, okay, what would be the price per earnings in the future? Okay, because if Peloton's growing like 50 to 100% year over year, and it's actually been growing 100% revenue year over year the past several years, do I think it's really going to continue on? I think, okay, in 5 years, it might slow down, probably slow down to like 50% growth is amazing if it still can continue like that. But I don't know, there's not a lot of companies that can do that. So I thought, okay, even if it grows 35% by 2025, then what would be would be a good PE ratio? And this is going to get like speculative because you're going to have to guess a PE ratio, and this is going to be dependent on the interest rates at that time. It's going to depend on the sentiment at that time. But I'm going to just take a guess, a calculated guess, that it shouldn't be no more than 2 times the growth rate. So if I say, hey, it's going to grow 35% by 2025, then I'm going to have a PE max of 70. But because I'm more cautious, I'm going to like downgrade it down to PE of 50, okay? PE of 50, just to give me a margin of safety. Now I'm going to use this simple, easy peasy calculation where market cap is equal to the PE ratio times the net income. And the net income is equal to revenue times the net margin. So I'm going to just do back of the envelope calculations where I take the market cap 5 years from now, which is around 60 billion, divided by 50, divided by my profit margin, which is 10%, and then I get a net income that I'm expecting of 1.2 billion. So then all I'm trying to get at is like, can it hit net income of 1.2 billion in 2025? Then I think, how does the revenue, what would the revenue need to like really look like? So remember, I'm looking for a net income of $1.2 billion in 2025, which would mean that, hey, if I bought the stock today, I can potentially expect the stock to double in the next 5 years. So that's like my target net income. So all I do is I go to Yahoo Finance and find the recent analyst ratings, which shows the projected revenue for 2022, which would be actually revenue for 2021 and 2022, and it's all in Yahoo Finance under analysis. And I also look at the investor presentations because a lot of CEOs will give forward guidance, and I use that in my estimations. And then, as much as I would love to use 100% revenue growth like it's been going on for the last few years, I'm gonna be a bit more conservative. I'm gonna say, hey, 2022, after that, it's gonna be 30% year over year growth. And then I get approximately like between $9.5 billion to $10.5 billion. Now, because I'm only looking for a net profit margin of 10%, because I'm going to assume, look, the company's going to have some problems scaling their products. They're going to have lots of costs and expenses with building factories, with distributing their products. So I'm just being conservative and say, hey, let's just shoot for 10% minimum profit margin. As you can see, if you take 10% off of 9.5 billion or 10.5 billion, you're not quite hitting the 1.5 billion net income that I'm shooting for. Now, of course, you can say, oh, Tracy, you're so conservative, but yes, I am more cautious. But you know what? Look how simple this calculation was. I had to figure out a future PE ratio. I had to figure out, can it hit a profit margin of 10%? And it just got me thinking, like, what other companies have a 10% profit margin that produces fitness equipment? So I found a company, I can't pronounce the name, but they have they've been able to achieve 10% profit margins, and they're not even really in the technology space. So I think that's super achievable. So I don't think that's a big deal, but you never know. It's still an estimate, okay? So as you can see, Peloton was really, really close to hitting my net income target, 1.2 billion. And of course, this model is super sensitive to a P ratio net margin. I could have obviously boosted the P ratio. I could have played around with the net margin, but I thought, hey, if I can play a more cautious game and it still wins, then this company will become like a no-brainer. But I'm really shooting for 2xing my money if I invest in a high growth, but like in a start, like this company's still in the baby stages. To me, I'm not quite clear on the complete upside. Like to me, there's definitely potential for upside, but I also see a bit of downside. So to me, the risk versus reward isn't quite there for me. I mean, I want massive upside versus downside. Because of recent news about Peloton and the fact that the majority of its revenue is from a bike, even though it has a subscription model, to me, it's not quite there yet. I'm just kind of thinking like, is this another GoPro? GoPro is like a one-trick pony. So as much as Peloton is trying to expand their revenue sources, I just don't see a clear product roadmap. So to me, hey, Peloton, I love the bike, I have it. I'm going to add Peloton to my watch list. I'm going to just watch the execution and the growth of this company, because if this company is able to execute well and produce a lot of great products, then it has ample room to get in the game when it's going to be more proven for me. You really liked my simple framework of evaluating high growth stocks. I'm going to let you know, look, I have built a course, a whole course that talks about how to grow your income, build your wealth using stocks. It's called the Financial Freedom Accelerator course, okay? Last time I did this course was sold out. So if you are serious and not afraid of hard work and learning, and really want to grow your income and build your wealth so that you go from where you are today to where you want to be, then you got to check out my link below and apply. And look, here's some of my reviews so far. And I can promise you, the course is like no fluff, okay? I'm a busy woman, and I'm pretty sure a lot of you are busy professionals or have great careers, but really, really want to invest and make your own financial decisions the most effective and most stress-free manner. Well, I can tell you, I can totally relate. Hey everyone, I hope you found this video so valuable, okay? I spent a ton of time really thinking about this video, so all I ask for you is smash that like button. I hope to see you in the next video.